So, 2025, wow. What a year for crypto, right? It felt like this was it, the year it was finally going to break through for good. But instead, we got this insane roller coaster ride. We're talking staggering highs and then just gut-wrenching lows. A really brutal lesson in volatility. So, after that historic boom and the catastrophic bust that followed, the big question on everyone's mind is, what on earth happens now? Where do we go in 2026? Let's dive in and try to make sense of it.
Okay, to kick things off, I just want to put a number in your head. $1.2 trillion. Yeah, just let that sink in for a second.
That is the amount of value, the amount of wealth that was just erased from the crypto market. And get this, it happened in just 6 weeks at the end of 2025. It was a total shockwave, wiping out fortunes and leaving everyone absolutely reeling. So to really understand how we got here, and more importantly, where we might be going, we got to rewind the clock a bit.
Okay, but before we go any further, you know the drill, but it's super important. I have to say this. None of this is investment, legal, or tax advice. We're just looking at the information here. The crypto market is, well, incredibly volatile. And what happened in the past is absolutely not a reliable indicator of what's going to happen next. Okay, cool. All right, let's get into the real story.
2025 really was a tale of two extremes. It's like we lived through two completely different markets in a single year. The first part, say the first 9 months, it was just pure euphoria. I mean, an absolutely unstoppable climb that was fueled by what felt like a perfect storm of amazing news. So how did we even get to that peak? Well, it all started building back in late 2024. A new pro-crypto administration got elected in the US, and that alone just sparked a ton of optimism. Then, bam, Q2 of 2025, the Genius Act passes. This was huge because it gave some real legitimacy and clarity to stablecoins. Then you layer on the fact that the Fed started cutting interest rates, which basically tells investors, hey, go find some riskier assets. And where did they go? A lot of them went to crypto. All of these things just built and built, leading to this massive crescendo on one specific day, October 6, 2025.
And that was the day Bitcoin hit its all-time high, $126,080. Just incredible. The market was in a state of what all the indexes call extreme greed. The party was in full swing.
And what's so wild is when you look at all the drivers behind this extreme greed, it wasn't just one thing. It was everything happening at once. You had just massive amounts of cash from big institutions pouring into those spot Bitcoin ETFs. You had that super friendly regulatory vibe coming out of the US. You had big name corporations still adding Bitcoin to their balance sheets. And to top it all off, we were right in the sweet spot of that classic post-halving bull cycle. I mean, it really truly felt like nothing could possibly go wrong.
And then it did. Of course it did. See that whole euphoric rise? It was built on a massive, shaky mountain of leverage. And that mountain was about to come crashing down in what we now call the Great Liquidation Event.
So you have to ask, right? What was it? What was the one spark that lit the whole fuse? How could all that powerful bullish momentum just turn on a dime like that?
Well, it turned out to be a geopolitical bombshell. On October 10th, this Trump tariff shock happened. The threat of new, huge tariffs on Chinese goods just sent this wave of fear through all of global finance. And this is key. This wasn't just a crypto story. It was a massive risk-off event. That's when investors panic and just dump anything they see as speculative. And that meant stocks, and yep, that meant crypto.
And this is where all that leverage became so incredibly dangerous. That first price drop from the tariff news, it triggered what's known as a liquidation cascade. And you should really just picture a line of dominoes. The first one falls, that's the price dip. That triggers automated systems to force sell a bunch of leveraged positions. That selling pushes the price down even lower, which, you guessed it, knocks over the next domino, triggering even more forced selling. It's a vicious downward spiral. And the result of that cascade, something like $20 billion in leveraged positions, were just gone. Forcibly wiped out. It was the biggest liquidation event in the history of crypto. The whole internal plumbing of the market just broke. And in all that chaos, one of the biggest stories, one of the core promises of crypto just shattered. For years, we'd all heard the promise, right? Bitcoin is digital gold. It's supposed to be a safe haven, a hedge against exactly this kind of geopolitical risk. But the reality? When real panic hit the markets, Bitcoin sold off just like every other risk asset. It behaved more like a tech stock than gold. And you can literally see the psychological whiplash right here on this chart. Look at that. In October 2025, the fear and greed index is way up at 80. Pure euphoria, extreme greed. Fast forward to January 2026, it has absolutely plummeted to 18. We're talking deep, deep, extreme fear. That shift in sentiment was just brutal. So all of that brings us to right now. After that insane crash, the crypto world is, probably not surprisingly, deeply divided on what happens next. The outlook for 2026 isn't just a debate, it feels more like a battlefield of completely different theories about the future. And this right here, this is the core debate. You've got the bears on one side, and they're saying, look, history is just repeating itself. This is the end of the traditional 4-year cycle. Get ready for a long, cold crypto winter. But then you've got the bulls on the other side, and they're shouting, no, 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 this time is different. They're pointing to all the deep institutional adoption, the new regulatory clarity, and arguing that this is creating a whole new long-term growth story that breaks those old cycles. And you can see this great divide perfectly when you look at what Wall Street is forecasting. It's kind of wild. You've got giants like JP Morgan and Bernstein saying, hey, we see Bitcoin hitting $150,000, maybe $170,000 because of all that institutional money. But then you've got other heavyweights like Fidelity and Fundstrat saying, whoa, hold on, we see it falling back to the $60,000 or $75,000 range. They're calling for a sleepy, maybe even bearish year. The experts are just all over the map. But there is one thing that pretty much everyone agrees on. There's a powerful new force that's really shaping the market in 2026, and that is regulation. It's finally coming of age. And the key thing to get here is that the shift is massive. The era of just talking about the rules, of debating policy, that's over. 2026 is the year of implementation. We're moving from ideas on paper to actual real-world enforcement. So what does this new reality look like? Well, you can kind of break it down into 3 big pieces. First, major global frameworks, like MiCA over in the EU, they're not coming soon anymore. They're fully operational. Second, in the US, laws like the Genius Act are finally providing some clear guardrails for really important stuff like stablecoins. And maybe most importantly, number 3, compliance isn't just something for the legal department to worry about anymore. It has to be baked into the very core infrastructure of any crypto business. Like it or not, the industry is being forced to grow up. Okay, so beyond just the market prices and all the new rules, there's another profound shift happening, and that's crypto's actual role on the world stage. Especially when you look into some of the darker corners of geopolitics and international finance. Yeah, check out this quote from TRM Labs. It's really telling. It says that state and state-aligned actors have moved to using crypto as core financial infrastructure, not just a tool of last resort. Think about that for a second. We're not talking about countries just dabbling in crypto to get around sanctions anymore. We're talking about them institutionalizing it, building it right into their main financial systems. This is a quiet trend for sure, but it is absolutely massive. And so that brings us right back to where we started. After the absolute whiplash of 2025, what's the future here? Is crypto just destined to repeat these wild boom and bust cycles forever? Or was this incredibly painful correction actually a necessary step, a stepping stone on the path to crypto becoming a real permanent part of the global financial system? That right there is the defining question for 2026 and for all the years to come.